This is the Value Investor Podcast with Tracey Reineck. All things value, all the time.
Welcome back, value investors. So dividends are in again. So why not get some extra cash? Who doesn't like to get the dividends? I know I do, even if they're, really, really small, even if they're $10 and it just kind of goes in my account and I buy, 0.001% of a share or something crazy. I still like getting them. But what if you can get a value stock also paying a big dividend? There are a lot of them out there right now, but there is one industry that has rising earnings, record free cash flow, and is also cheap. I'm sure you already know what industry I'm going to say. Yes, you guessed it. It is energy. So if you want a cheap stock that also has the big payouts, you almost have to look at energy here in 2022. It's one of the few sectors, other than I would say some of the banks, that also have rising earnings estimates and nice dividend payout there too. I should actually do another follow-up show on which banks are paying out the real good dividends, because we could see some increases in dividends possibly from the banks too going into 2023. And getting a 3% or even 4% yield is pretty darn good. Some of the ones I'm going to talk about today are doing even much better than that. But if I can own that bank and I'm getting the 3 or 4%, that'll start to compound on itself. So I like that. So I just gave myself an idea for another podcast episode there. I am going to cover the banks at a later date. But for today, I am going to cover the energy. So I'm sorry for all of you who will never buy the energy stocks. I'm sure you're getting this podcast and you're like, no, not another energy podcast. I get it. I understand why many will not buy this industry. But for everyone else who doesn't have those issues with owning energy, 2022 is the golden year for dividends in the energy industry. We likely may not see this ever again because we are transitioning to other forms of energy away from fossil fuels, and because we have the record high prices in both natural gas and in crude right now. So everything is kind of coming together. That's why I called it the golden year, because it is like a Goldilocks environment right now for energy. So they have record earnings, record free cash flow, and they're giving it back to us, the shareholders. So many companies are paying anywhere between 50% and 80%, or maybe even sometimes higher. I'm going to talk about one that's paying even higher of their free cash flow back to us, the shareholders. So that's what we're trying to get here. We're trying to get that big dividend. And so that's where we're going to try to dive in. Now, how do you find these companies? I didn't do a screen because it's difficult. You can screen for dividend yield, but the dividends that these companies are paying and the shares, the share buybacks, it's kind of a combination. It's the base dividend that they have always normally paid. Then it's variable or special dividend, depends on the company what they call it, but that's just what's being paid for that particular quarter. So it doesn't happen every quarter, and we don't know what it's going to be for the next quarter. And then there's the huge share buyback plans, and most companies are doing a combination. Some of them have bigger share buybacks than others, but that all influences the yield too if they're buying back a ton of shares. So I can't really screen for that. So I didn't screen for it for this episode. But I heard a commodities expert on CNBC the other day talking about which energy companies have the big yields. And so I quickly got out my little notepad here and I was writing down all the ones he was saying, because I always like to just get a list like that. So that's what I'm bringing to you here is the ones off that list that he gave, plus another one that I thought should have been on the list because I know they're paying out big amounts. So I'm going to talk about that one too. So I actually have 6 stocks this time who are paying bigger, although one of them doesn't seem like it's that big. So I'm not quite sure why it was on the list, but it could get better as it goes along. So I'm keeping it on here. let's just leave it there. So let's just dive in. The energy expert expects all these companies to yield over 8%, or at least a bunch of them in 2022. Now, some of them, it's going to be more than 8% yield when you add in the share buybacks. And what is happening now with energy prices still holding above 100, most of them anticipated at the start of the year much lower average prices for both natural gas and WTI. So they have been raising their anticipationing, into what is going to be happening with their earnings and all of that. But I don't think they were anticipating $122 WTI and $9 natural gas in June of 2022 and holding at that level for, any length of time, even a couple of weeks, and what that will mean for their free cash flows. So I expect the second quarter to be the best these energy companies have ever reported. I thought that of the first quarter, and it was, and now it's going to be even better here in the second quarter, because all the prices are higher. And so as long as they're getting it out of the ground and able to sell it, then, these should be amazing quarters. So that being said, the variable dividends on many of these companies will change in the second quarter. I do expect them to go up. And so the yields are going to be even better going forward here for the next at least one quarter, maybe two. So keep that in mind. And each company has its own kind of payout program. I tried to dig in to see what was going on with each of them, but you have to check in on their quarterly report to find out exactly what is happening, because some of this will change going forward. Okay, so let's dive right in. The first one is one I've talked about many times, Devon Energy, DVN. It's a fan favorite because of its big dividend payout, has a $51 billion market cap. It drills oil and gas in the Delaware Basin, in the Permian, and it had record free cash flow of $1.3 billion in the first quarter. On Yahoo Finance, so I'm using Yahoo Finance as my barometer on the dividend yield. I did not use Zacks.com, because Yahoo Finance, it appears, is including whatever they're giving for the quarter in the annualized. I don't know how else to describe it, so I'll just describe it as we go along. And so the yield on Yahoo Finance is not always going to be correct because of the special dividends that these companies are paying out. So keep that in mind. But it's the one I know we all use, so I'm sticking with Yahoo Finance for the yields. So Devon is yielding 6.6% right now on Yahoo. It's $5.08, it says, for the year. They paid a quarter and the fixed plus the variable. So quarterly fixed plus the variable was $1.27 in the first quarter. And that one, they haven't paid out yet. I'm recording this on June 8th. They're paying it to those of record as of June 13th, and they're paying it on June 30th. So remember, if you're going to try to get in there, you have to do it soon. Again, I'm recording this on June 8th. So you need a couple of days for your trade to clear. You cannot buy it on, say, June 12th or even June 13th. It won't clear in time and you won't get the dividend. So I always do it at least 5 trading days ahead. So try to do that. But if you miss this one, there's always this next quarter is coming up soon, but it'll be a couple months till they pay that one out, obviously. So they did raise their share repurchase plan also by 25% in the first quarter to $2 billion there. So that's where you're getting the bigger yield than just what Yahoo Finance is saying, 6.6%. But if you throw in the share repurchases, it's much higher. That's where you're getting over the 8% for this year. So keep that in mind. That's Devon Energy, DVN. Then we're switching over to Pioneer Natural Resources. PXD is the ticker. I've talked about them many times. They're the ones with the best balance sheet, market cap of $69.2 billion and little debt. I own them in my own personal portfolio and in Zacks Value Investor. So the first quarter, they paid their base dividend plus the variable was $7.38. Now, Yahoo Finance is giving me a yield of 4.3%, but it's showing $12.34 annualized. So they really don't know what to do when you have this kind of big quarterly variable in there, the quarterly plus the variable. So that was 738, but Yahoo's showing 1234, but that was just the first quarter. So what else are they going to do? What if they're paid that 7 every quarter? Well, that's $28, not 1234. So the yield is messed up too on Pioneer. Just keep that in mind. The yields are all messed up on these. So it is paying the quarterly plus the variable, and it repurchased $250 million in their share repurchase program in the first quarter. But that's not bad, but they're pretty big market caps, so it's not great, but they're mostly giving it back in the form of the dividend. So they had free cash flow of $2.3 billion in the first quarter, and they returned, get this, 88% of it came back to the shareholders. So they said the $7.38 was an annualized yield of 13% when you throw in the repurchases and all of it. That was at the time of their report. The shares have gained some more since then, so it's a little bit lower right now, but still 13% annualized if it keeps on this pace. That's the highest in the S&P 500. So you're not only getting appreciation in the shares right now, you're getting this tremendous yield. So that's Pioneer Natural Resources, PXD. Okay, the third company I hadn't heard of before. And I was like, how could that be? I know all the energy companies, but now it makes sense because I was not following this merger. So the next company is a newly merged company, CTRA Energy, ticker CTRA. And this is the combination of Cabot Oil and Gas and Cimarex, one of my favorites from the last energy bull market, Cimarex. And so they've merged. They merged in October of 2021. They're based in Houston. And so now they have a pretty big market cap, $29 billion. And they drill in the Permian in the Delaware Basin. And just so you kind of know, like what these companies are doing, they do both oil and natural gas. So in the Permian, they're doing 64% liquids, 36% natural gas. And then they're also in the Marcellus Shale, and that's in the Appalachian Basin. So that's Pennsylvania, West Virginia, New York. That's all natural gas. Then they're also in the Anadarko Basin. That's in Oklahoma, and that's 46% liquids and 54% natural gas. So they have a nice natural gas component here. And for the first time in a long time, you got the record highs in natural gas. So they're going to be killing it on that side of things in here in the second quarter. But in the first quarter, they had free cash flows of $961 million. They paid out 50% in the first quarter of the free cash flows in the dividend and the variable. And then they have a huge share repurchase plan, a $1.25 billion repurchase plan. And when they add in the buybacks, that's another 19%. So they're paying back 69% to shareholders. That's pretty solid, if I do say so, especially on a recently merged company. Yahoo Finance shows their dividend yielding only 1.7% right now, or 60 cents. So they have a 15-cent base. They paid a 45-cent variable. They're a newly merged company. So if they did that every quarter, it wouldn't be 60 cents. It would be $2.40. But we don't know what the variable is going to be in Q2. Could be better than what we saw in Q1. We don't know. But that's why the yields are just wrong on Yahoo Finance, and you can't screen for it. Also, on the share repurchase plan, they did repurchase in the first quarter. So on the remainder in that $1.25 billion plan, it's just a little over $1 billion, I think, remains. That's about 5% of the market cap will be bought on the buybacks. So that is CTRA Energy, the Cabot and Cimarex merged company. CTRA is the ticker. Then we're going to get to some more familiar names. Diamondback Energy, the old FANG, the original FANG. FANG is not dead. Ticker FANG has a market cap of $28.3 billion. They're in Midland and they drill in the Permian, big Permian player. Now on May 16th, they announced they're buying Rattler Midstream. So they're still doing some acquisitions. But they have, again, rewarding the shareholders. And they said in the first quarter that they're returning, and I quote, at least 50% of free cash flow. So it could be more, but at least the 50%. So in the first quarter, they saw free cash flow of $974 million. They raised their annual base dividend 17%. To $2.80 for the year or 70 cents per quarter. The variable in the first quarter was $2.35. So the variable is almost equal to the base dividend for the year in just the first quarter. So the variable plus the base, Diamondback said, was a annual yield of 9.7%. And that was as of May 2nd when they reported. The shares have risen since then, so it's not quite as high a yield. They also are repurchasing shares, but it's very small. They repurchased just 6.7 million shares in the quarter. So it's not as big as some of these others, but still nice to see the combination of all three things. So on that $2.80 base annual dividend, Yahoo Finance says it's a yield of 1.8%. But as I said, if you're adding in the variable, annualized, it's 9.7%. And just to tell you how far along the American energy companies have come in the last decade, since the Permian started being developed and innovation happened, drilling got better, technology is better, the U.S. producers got better basically during the bear market of the last decade. Diamondback said that in 2012, they were drilling 3,500 barrels of energy per day. So 3,500 per day in 2012. By this year, 2022, 10 years later, they are drilling 380,000 barrels of energy per day. So 3,500 to 380,000. So not too shabby. And, they've been crushing it. People love Diamondback for many reasons, but one of them is that increase in production, obviously. And now you have energy at these high prices. They are returning it back to the shareholders, or at least 50% back. So that's Diamondback, ticker FA. Then a fifth company, EOG Resources. We know them. I've talked about them many times too. EOG is the ticker. Market cap on them is $85 billion. So they're a bit bigger. I think they are just under Pioneer. No, they're bigger than Pioneer. So one of the big guys, other than, Exxon, Chevron, those types of guys. But EOG Resources at $85 billion market cap. Now, they have pledged to return a minimum of 60% of the free cash flow, and they paid a regular dividend of 75 cents in the first quarter, the special dividend of $1.80. They had free cash flow of $2.4 billion. And Yahoo Finance is looking at that regular dividend and saying, hey, they're going to make $3. So it's yielding 2.1%, but it's not because they paid that special already of $1.80. So EOG, is much higher than that, and as all of these are. And I don't have anything about share buybacks, so I'm not sure if EOG is doing one. I did not write it down, so they may not be. They may be one of the ones that is choosing not to do the share buybacks right now. But again, a lot of this will change as we move forward because of the record energy prices. They're just going to be awash in the cash for the second quarter. So you want to get some. You want to go out there and get any of these. Okay. And then I'm putting on an extra bonus company. ConocoPhillips is the sixth stock. COP is the ticker. I own it in the value investor portfolio here at Zacks. That's how I knew that the yield was pretty high on this one. So in May, they announced they were increasing their return on capital. They keep announcing every quarter how much they're going to give back to shareholders. And it was $8 billion for the year. And now they raised it another $2 billion in the first quarter to $10 billion. And they are paying the ordinary dividend of 46 cents, the special or the variable, I think they call it a variable there, 70 cents. So Yahoo Finance is saying, oh, $1.92. It's only 1.6% yield. But we know going forward, if they keep doing this, it's clearly not $1.92. They also have a big share repurchase plan, $1.4 billion. And they also paid out $1.1 billion to reduce their total debt in the first quarter. And many of these companies are reducing debt at the same time. But I noticed that one, they're specifically mentioning it. They want the shareholders to know, hey, yeah, we're paying you all this money, but we're also, improving the balance sheet as we go along here. In the, and this company, this was an interesting little tidbit that's a little different than some of the others. So on the special or the variable, it did not pay it out at the same time it paid out just the standard dividend. So it's not paying it out until the third quarter. So some of these companies are being a little more conservative. Hey, we're going to announce this, but we're not going to pay it out for a couple of months just to be on the safe side, make sure, what our cash flows are doing. If there's a plunge in energy prices, we don't get caught with, this big special that we already just paid out. So they are being a little more conservative. This one is being paid out in the third quarter is what they said. So there's still time to get the special dividend on ConocoPhillips. You have until June 28th, 2022. Shareholders of record as of June 28th. And like I said before, you have to get in there a couple days before. I always allot at least 5 days so that your trade clears. It has to clear to be a shareholder of record. And each brokerage firm has different clearing timelines and dates on like how they do it. So don't think you can get in there like 2 days before and you're going to get it, because you will not. You'll be disappointed. So June 28th is the date, the deadline, and it's payable on July 15th. And that was 70 cents on that special for ConocoPhillips. Now, I also went through to look how cheap are these companies. I know they're all dirt cheap because the earnings estimates continue to rise. Now, we're about 5 to 6 weeks away from further earnings reports for the second quarter earnings reports. And already, given the prices of WTI and natural gas, the analysts know that they're too low. The earnings estimates got to come up again. So they're just now starting to adjust their earnings estimates higher, but we will see more of that going forward. And even though these shares are all hitting new 52-week highs, it still means, because those earnings are still rising, that they're all dirt cheap. So Devon, DVN, the ticker there, is trading at 8.9 times. Pioneer, ticker PXD, is trading at 8.4. Forget the name of that one. What is it called again? Coterra. Sorry, Coterra. You're new, so I don't know you as well. Coterra, CTRA, is trading at 8.7 times. Diamondback, ticker FANG, FANG, is at 6.2. So it's the cheapest out of this list. EOG Resources is at 8.6, and Conoco is at 8.2. And what have they done for the year? So Diamondback has lagged the most, but it's up 48% now year to date. Pioneer's up 56%. EOG Resources up 64, ConocoPhillips up 69, Devon up 75.7%, and Coterra, the newly merged company, is the winner. It's up 87% here year to date. Now, I know what you're thinking. Tracey, it's too late to buy all of these. They ran last year. They were up big. It's the best performing sector in the S&P 500 in 2021. And now they're up big again. And once they're up, 87%, that's basically pricing in everything. Why should I buy here? Well, I used to think this too, except we're at the early stages of a bull market in energy. And energy prices are expected to remain elevated through this year into 2023. Now, anything could happen. Nobody foresaw the Ukraine war, for instance. So that has spiked up prices. And if there's a ceasefire or some resolution to the Ukraine war, let's hope that happens soon. And when it does, energy will get hit. Some of the energy analysts I saw said that that will create a real buying opportunity in the energy shares because they expect like a big hit where, down 10, 20, 30% maybe in some of the stocks, especially natural gas, as energy prices will sell off the same way they spiked on the start of the Ukraine war. They will have a relief of, yay, it's over. And that may be temporary on commodity prices, but that doesn't mean it's not going to happen. So that will create a buying opportunity. A lot of these shares, we've seen it already over the last couple of years when the commodities have weakened, these prices have all come down. So you might want to stay on the sidelines waiting for another entry point, or maybe not, dollar cost average. And just as an FYI, I bought ConocoPhillips in Zach's value investor in March of this year of 2022. Seemed like a little bit late, right? I think we bought it right before earnings season or the companies were reporting. And I knew I wanted to get in before so I could, get any kind of boost. But the energy stocks didn't get that much of a boost off of their great first quarter earnings. I thought it would when they announced all the special dividends and everything, but nobody really cared. They're like, that's nice. The stocks have grinded higher, but they didn't get like, hey, I'm getting a 13% yield in Pioneer. I need to buy that. They didn't get like a huge boost. But we got in right before that because I thought we would, and we're up 22.5% in Conoco so far since we bought it in March 2022. I'll take that plus our yield that we're going to get. That's a nice return. I try not to get, I'm not getting greedy here in a stock market where the S&P 500 is down 13% year to date. I'll take, my 22.5% gain over the last couple of months plus my yield. So keep that in mind. I don't feel like it's too late. I'm still adding to my energy positions, and I'll add on any big sell-off. And I still believe it's still the early innings, and earnings will remain elevated in the second half of 2022. But the market is forward-looking. It will start to price in lower commodity prices for 2023, and that could eventually cool off some of the stocks. But in the meantime, again, we're getting these big dividend yields. So if you are looking just for some cash, you don't even have to reinvest the dividend. You can just take the cash and run, right? Some of these are going to be paying you out with the big payouts, especially this quarter and, possibly to come in the second half of 2022. So that's the name of the game here in 2022. Dividends are in, value is in, you're getting both of those in energy. But as I mentioned earlier, there's also some other good areas that have all of these criteria, including the banks. So I'll be back with another podcast on the banks, as I said, so that we can take a look there and see where we're getting cheapness and at least, a 3 or 4% yield, which, sounds kind of low if you're looking at these energy stocks, but is still a great dividend to use to compound your returns. So let me recap the stocks again. We had Devon, DVN, Pioneer is PXD, Coterra is CTRA, Diamondback, FANG, EOG Resources, EOG, and ConocoPhillips, COP. There are many other energy companies. You can say, what about Occidental? What about Exxon, Chevron, the big oils? What about some of the small E&Ps that are also paying dividends? That's all true. They all are. And you can still get a big, nice dividend with many of those that I just mentioned as well. But these guys are the bigger caps, and they got those free cash flows. They got good balance sheets, and they are rewarding shareholders. So I'm sticking with these ones for now if you want the dividends. So be sure to subscribe to get the podcast because I'm going to bring you that bank one I know banks are boring, but sometimes boring is good, right? You get that dividend, you just compound that dividend when no one is paying any attention. Banks have been a way that long-term value investors have been very successful. Just look at Warren Buffett. He loves the banks. He's owned them for 50, 60, 70 years now. So banks, good businesses. So I will be bringing you that. You don't want to miss a single episode. Get us on Apple Podcasts, get us on Spotify, get us on Amazon Music, get us on SoundCloud with the Zacks Market Edge. I do 2 podcasts a week. Make sure you're getting both of them, the Zacks Market Edge and the Value Investor Podcast. But get us somewhere, and I'll see you again next week with some more value stocks.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.